If you hold a real estate note with a remaining balance of $80,000, you might assume that when you sell it, you'll get $80,000. That makes sense, right? After all, that's what the note says. But here's the truth most note sellers don't expect. You won't get $80,000. I'm Phil Gorman. I've been buying and selling notes for over 40 years, and today I'm going to explain why notes sell at a discount, what yours is really worth, and what you can do to minimize that discount. Think about it like selling a used car. Let's say you bought a car 5 years ago for $40,000. Today, you want to sell it. Are you going to get $40,000 for it? Of course not. The car has mileage, it has wear and tear, it's older. A buyer looks at the condition, the history, and the risk, and they offer you what the car is worth today, not what you originally paid. The same principle applies to your note. The face value is not the same as the market value. So why do notes sell at a discount? There are three main reasons. Reason number one, time value of money. Your note pays out over time, maybe 5 years, maybe 20 years. A buyer is giving you cash today for money they won't fully receive until years from now. That's a risk for them. To make it worth their investment, they need a return, and that return comes from buying your note at a discount. Reason number two, risk of non-payment. What if the borrower stops paying? What if they default? The buyer is taking on that risk. Even if your borrower has been perfect so far, there's always uncertainty. The buyer prices that risk into their offer. The higher the risk, late payments, low equity, poor credit, the steeper the discount. Reason number three, the buyer needs to make a profit. Note buyers are investors. They're not doing this as a favor. They need to earn a return on their money. Just like you wouldn't invest in a business for zero profit, a note buyer won't pay full price for an asset that ties up their capital for years. The discount is how they earn their return. So what's a typical discount? It depends on your note's specifics, the borrower's payment history, the property type, the interest rate, and more. But in general, discounts can range anywhere from 10% to 40% or more. That $80,000 note might sell for $55,000 to $70,000, depending on its condition. Now here's the good news. The better your note's fundamentals, clean payment history, strong equity, good documentation, the smaller your discount will be. Look, I know it's frustrating to hear that your $80,000 note won't sell for $80,000. But understanding why notes sell at a discount puts you in a much stronger position when you go to sell. You'll know what to expect, you'll know what questions to ask, and you'll know what steps you can take to improve your offer. If you want to know what your note is really worth, I offer free, no-obligation evaluations. Just reach out to me at phil@philgorman.com. I'll assess your note, walk you through the numbers, and give you an honest, realistic expectation of what you can get. No surprises, no pressure, just straight answers. I'm Phil Gorman. Thanks for watching, and I'll see you in the next video.